First, let us look into the next chart. Next one is Havells. This is a 75-minute zone, high liquidity zone. See this zone, already 4 times it is tested, 4 rejections from this zone. Still you can plan a trade inside this zone. How you can plan? If you find a fine-tuned 5-minute zone, then you can plan a trade. A fine-tuned, fresh 5-minute zone. Okay, when this zone is created on 26th March 2024 at 11:45 minutes candle. After that, one base candle. 26 March 2024, 11:45 candle. This is Havells. Havells India, NSE stock I am opening. So this is Havells India. So 26th March 11:45. This is the one, 26th March 11:45. We have a rally candle, base candle, and again rally candle. Rally, base, rally. See here? RBR, rally, base, rally. This is the 75 minutes high liquidity demand zone. So let me draw the zone. So let me change the color to light color. So this is a 75 minutes demand zone, rally, base, rally. And prices are already entered earlier several times. So this was the last candle. So that's why software identified stocks near the demand zone. But we need to plan our trade for the next trading day. On this, whatever you are seeing on the screen, that was the candle. Based on that candle, our software identified this zone. So next day we need to plan our trade in case prices enter into this zone. But is there any, first of all, is there any fine-tuned zone, fresh fine-tuned zone? That is what you need to identify. So how you identify? You need to check if there is any 15-minute zone overlapped with this 75 minutes high liquidity zone. So I am changing the time frame to 15 minutes. So here we have a 15-minute zone. Let me increase the thickness, the color thickness. Okay, this is the 15-minute zone, rally, base, rally. And also here one more 15-minute zone, drop, 2 base candles and a rally candle. We have a drop candle, 2 base candles and a rally candle. So this is the 15-minute zone. That means we have identified 2 fine-tuned zones, 15-minute zones inside 75. This is the one, and this is the most recent price action. This is a new zone is created inside this. So which is the nearest to the current price? This is the one. But is there any fine-tuned 5-minute zone? That is important. If there is no fine-tuned 5-minute zone, this will be violated easily. If there is a fine-tuned 5-minute zone, definitely we can plan our trade. So I am changing the time frame to 5 minutes. And let us verify. First we will draw here. Yes, here a drop, 2 base candles rally. This is available. Very good. Let me increase the color thickness, demand zone. See here, this 5-minute zone is overlapped with 15-minute zone. This 15-minute zone is overlapped with 75 minutes high liquidity zone. So we have a good institutional order flow here. But what about the recent price action? Is there any 5-minute zone inside this? Yes, we have a drop, 1, 2, 3, 4 base candles and a rally candle. So definitely we can plan a trade. This is another 5-minute zone. So how do you plan your trade? You have two options. If you are very sure this zone is very strong, you should keep an entry buffer. Generally, how much you keep entry buffer? Within 0.1%. This is what we discussed. 0.1% is our standard value. So what is this value, current value of this one? The zone entry is 1487.30 paisa. Please observe carefully what I am doing. 1487.30. I am adding this to memory value, memory plus. So saving. Now I am going to calculate 1% into, 0.1% into 0.1 divided by 100. We got 1.487. That means 1.5. 1.5. You just add this to the memory. So we have added. Oops, I cancelled the memory. I'm sorry. My bad. So let me do it again. The entry of this 5-minute zone is, this is the type 2 entry. We are planning our trade as per the type 2 proximal of this zone. So the type 2 proximal entry is 1487.30 paisa. Plus 1.5 we calculated. That is 0.1% of this value. So this should be your entry, 1488.8. Now let me add a horizontal line for defining my entry. In this coordinates, let me change the value. Oh. 1490. Again mistake happened. I'm sorry. This closes 1487.30. Plus 1.5 is the buffer from the entry. So 1488.80. 1488.80. Okay. See now blue color line is went to 1488.8. So this will be our entry. See, this is the buffer added. This is your proximal entry. Generally, what we do, we add 0.1%. So in this blue color area, if prices enter, you can take a trade. Many times we plan our trade like this. And those who are very strict, only prices enter in this area. If prices enter only, you will get the trade, otherwise you will miss the trade. Because many times, what happened, the high liquidity area, the order flow will be very strong. Many times the prices come very close to this zone and again they go up. That possibility is there. Sometimes the prices come inside and again they go up. That possibility is also there. That's why depending on your risk management, you have to plan your trade. There is no rule that every trade has to be successful. Successfully executed. Sometimes you will miss the trades narrowly. But it is all depending on your risk management. So what is our target? Target should be 15-minute zone. So this was before closing the prices on our trade day. So how you can plan your trade? So is there any, we have a very good leg out and we have candles are there. This is not a good area. See here we have a drop, base, drop. This could be a zone. These zones are not coming. A lot of consolidation took place. This is your target. See, all the orders are picking up from here. So what you want to do? You want to plan your trade like this. This is your entry. The blue color line, what we have drawn, that is entry. And this is your target. So do we have minimum RR is available? That is what you need to check. So long position. So this is your target. Just below add some stop buffer approximately. And your entry is exactly on this blue color line, because that is after adding the entry buffer. See here. This will be the entry and this will be the stop loss. And with this scenario, if you plan your trade, we have 1:4 RR is there. And Friday what happened? Market is started. Prices entered into our area. At what time it is entered? Let me go to 1 minute time frame. So this is 9:16 candle. So definitely you would have planned your trade. Why I am saying definitely you would have planned your trade? Because this is not a 9:15 candle. After that, the next candle prices entered into the blue color, whatever you have drawn, it went below this. And finally it reached your target. Your 15 minutes target is achieved. So you got an entry here. Prices didn't enter into the fine-tuned 5 minutes area, but just a little before they moved up. If you would not have added this buffer, you might have missed this trade. That's why entry buffers are important. When you should avoid entry buffer? If RR is not available, then you have to avoid. You have to plan your trade inside this zone. Until you get RR, you need to adjust. If prices enter, then only you take a trade. Otherwise, you will leave because your risk management is high. You cannot compromise at the RR. But here, even after adding the entry buffer, we got a very good RR. Because we got a very good RR, with the entry buffer we took the trade and finally it reached the target. This is one thing. Even if you would have added, some people trailing stop loss base, they will take the trade. If you are using trailing stop loss, This could have been your first demand zone, 1 minute demand zone. We have a drop base rally. If this demand zone is failed, then you will exit. Your profit will be very nominal only. But okay, instead of getting loss, we will be getting some profit. But this is holded. See the next one. This is the one. We have a drop base rally. And this is no more valid. We can delete this. So what is your plan in case if this zone is violated, you want to exit here. And the next one is a rally base rally. So you would have exited here. And the next one is rally base rally. This is the one. Sorry, not rally, drop. Drop base rally. So hidden body. This is the hidden zone. See how many times. This is 1 minute zone. See how many times it supported. How it holded the prices. In case if you would not have exited here, if you feel I want to grab more profit, if you would have felt like that, you have to use a trailing stop loss. Those who are happy, they would have exited here. Those who want to grab more profit, probably you would have gone for this trailing stop loss based. After that again you have a drop base rally. This is another zone. After that again you have this rally base rally. See here, it hit the stop loss. Now you would have exited here. If you would not have used a trailing stop loss, you would have exited. There is no much difference. A small margin is reduced if you are using trailing stop loss. But after that, market again recovered and went up. So you can't feel like this is the move you missed. But here it hit the stop loss. The moment it hit the stop loss, you need to exit in the trailing stop loss. So that means either you would have exited here in this target, 15 minutes target, or using trailing stop loss, you would have exited. A little less your profit margin would have been reduced. That is very nominal. It's negligible. The difference is negligible. Instead of you exit here, you would have exited here. That is the only difference. So this is the way we captured 1:4 RR here, right? So this is how you will be planning your trades. Well, first point you should observe in this trade, our price reached the 15 minutes target. It reached the 15 minutes target. See here, 15 minutes time frame. We have a drop base drop. This is the one holded the prices previously. And today it would have reached this target here and we would have exited. And anybody, instead of using this 15 minutes target, hoping that the trailing stop loss may give more profit, slightly your profit margin would have been reduced and you would have exited here below this demand zone. In either way, you got a very good RR. You got over 1:4 RR you got. In case if you did not use entry buffer, you would not have got an entry in this particular stock. You would have missed the trade. Those people who did not use entry buffer, those who want to trade only when prices enter into this zone, those people would have missed this trade. It's a very good trade. Gave very good profit. But the point you have to understand, the power of the high liquidity zones are excellent. They are giving you profits beyond your 15 minutes, your 5 minutes targets. Generally, when you take a trade at the 5 minute zone and your your target is at 5 minute zone, probably this could have been your 5 minutes target. This is the immediately available 5 minute zone. We have a drop, base candles drop. You cannot consider drop, base drop, because this is leg out is not great. So definitely this is not a zone. So this is a valid 5 minute zone. See, your profit would have limited to this, only this much. You would have got a very small RR also. I don't know whether really you get the RR or not. Let us check. By adding this entry buffer, if you would have planned your trade, you have to exit here. This is the way you got only 2:1.4 RR. Okay, because your risk is high, let us assume you are thinking to plan only in the zone only. If you would have reduced the risk, you would have got 1:2.9. That means 1:3, close to this. But price did not enter into this zone. So you would not have got a trade. And your profit margin, even if price enters inside, your profit margin is limited to this. If it is your info line, using info line, we will see how much difference is we are getting. See, this could have been your profit. 16 rupees, around 16 rupees could have been your profit. If you are planning 5 minutes demand zone to 5 minutes supply zone. But 5 minutes demand zone to 15 minutes supply zone, our profit is 30 rupees. See, here it is 16 rupees 10 paisa. Here it is 30 rupees 60 paisa. Almost close to the double the profit. But our profit, double the profit we achieved. We achieved because we are planning our trades in the high liquidity zones. If it is a normal demand zone, it might be difficult to reach up to here. Because it is a high liquidity, see the rejection, how big the rejection is here. On the 5 minutes candle, if you are thinking from 5 minutes candle, see huge rejection. That means such a strong order flow. Now you may ask a question, because the 5 minutes area is a price not even entered into this. Because of buffer we got the trade. Can we plan a trade again next time into this? Yes, you can plan a trade, but with only one condition. What is the one condition? Our NeoStock software should list the stock as a near the demand zone. Only in that condition only you have to plan your trade. If the software did not list the stock, still if you plan a trade, your success rate is 50-50. It may work or it may not work. There is no guarantee. If NeoStock software next time again identifies this stock near the demand zone, the success rate is more than 80%. That is what you have to understand. So that's why I am telling you, if the stock is identified in 2 days after market hours, then only you plan your tomorrow's trade on the stock. Otherwise, forget about the stock. This is the thumb rule you all should follow. If, let us assume tomorrow our software is not identified this stock. There are chances that this zone will be violated easily. That possibility is also there. Because of these reasons, you should be very careful while using the reports. Because some people made these mistakes earlier. That's why I'm telling you. Even though I told them, do not trade high liquidity zones unless high liquidity zones means the strategy whatever I am discussing in this video. Based on this strategy, don't trade if our software does not identifies the zone. One person ignored that point. Maybe he didn't listen properly, or even if he listened, maybe he might have thought, okay, no issues. I don't know, whatever the reason. And finally, in the next day, in the comment section, he put, I got a loss. The zone is violated. Immediately I asked him, where did you find this stock? He said 2 days back this stock was listed. I told them 2 days back or 3 days back they are expired on the day itself, next day itself. The report will expire automatically the next day. If today's report, whatever the stocks are there, if they get a trade tomorrow, you will execute the trades. If prices did not enter into the zone, it will expire automatically. Next time again, if our software identifies the zone, once again that zone will be active on the next trading day. Once the trading day is over, the report automatically expires. The expiry date of that particular report is immediately the next trading day. End of the next trading day. Within the trading day, if you get fine. So that's why always remember, once again I am repeating because it is an important point. Today's end of the day report should be used only tomorrow's trading session. Once tomorrow's trading session is completed, today's report will automatically expire. You can't use those high liquidity zones for further trading unless once again the future our software reports identifies that stock. Only our software identifies the stock, next day only you have to use. Otherwise you should not use. Hope I made it clear. Because I don't want somebody is complaining or somebody is feeling bad. I took some old HLQ zone but it is not working. I don't want to hear that from you people. It is a genuine trade. It is fine-tuned properly. The order flow is very good. Everything looks good. Still the zone is violated. You have to accept that. Because we are saying 20% scenario zone will fail. That day you have to accept the risk. Anyway, you are planning your trade within the risk management only. Everything is fine the zone but still violated means you have to accept there is no other way for us. Because we are saying success rate is only 80%. There are 20% scenarios we should plan. But those scenarios won't happen every time. They will happen once in a while. So, okay, if one day your zone is violated, perfect zone but violated, don't run away from the market. Next day it will again other zones will work. They will probably whatever the loss you got earlier, the stopped out, that will be recovered. Not only recovered, even you get more profit. See, most of the times you are taking 1:3, 1:4, 1:5 trades. Sometimes high liquidity zones gives 1:8, 1:10 also. Many times you see such kind of trades. Because our target is 15 minutes, not 5 minutes. That's why you get better RR you will get always in high liquidity zones. Even if you get one trade stopped out and one trade successful, you will be getting more profit. You are still in profit. Assume you are taking 1:4 trade. You got success. Next 4 trades continuously failed. Still you are in profit only because of 1:4. That means you are not into the loss. But generally it won't happen. Continuously 4 days the trade zones are failed. That is a rare situation. So far it didn't happen. Such kind of situation didn't happen in high liquidity zones. Once we have seen continuously 2 days, 2 trades are stopped out. 2 trades. It's like yesterday 1 trade, today 1 trade. It happened once, only once in the past. This is the past history. And also I am sharing the Excel sheet in the Telegram group. You can also refer the Excel sheets data also. And all everyday videos or analysis videos are available in our YouTube channel. So everyday videos also you can refer. We have all the proofs are available in our YouTube. This is one of the reasons why every day I am analyzing the charts and letting you know what is happening in high liquidity zones. Because concrete information, when you develop a new thing, a new concept, which was not in the market, such kind of powerful concept, always we should have maintain the data consistently. Everybody should know what is really happening. So that is one of the reasons why everyday HLQ analysis after the market hours I am doing and seeing how many we got success or how many we failed, or which zones we did not get a trade. So every day we are doing this analysis. Okay, anyway, hope you got a fair idea about this from this video. And if you go through all the HLQ zone analysis everyday videos, you get a lot of information, so many examples. From October 2023, 1st October 2023 till the date, you will be having plenty of examples. Each day you have a video. Each day any trades you will see. Each day any on the day if there are any stop loss, stop out trades, you will be knowing that in those videos. Every zone, high liquidity zone I am analyzing in everyday videos. So today's report, tomorrow after the trade hours, I am doing post-mortem analysis every day. There are 2 reasons. Reason number 1, to check the performance of our high liquidity zones. Reason number 2, whatever the analysis I am doing, that will be a learning for you people. Because many people are attending high liquidity zones. Continuously they attended for 3 weeks, 4 weeks, they got motivated, they got better understanding. And after that they participated in the trading and they are getting success. Hope you will make use of this strategy by using NeoStock everyday reports. So what I am recommending all you people from today onwards, every day get into the HLQ zone reports. That is a stocks near demand and supply zones report. Go to 75 minutes daily time frame and 75 minutes time frame. And pick up those high liquidity zones. And try to fine tune the zones. Initially sometimes you may make some mistakes. Sometimes you may not identify the zones. But do repeat this work. Whether you trade or not, that is a different question. But do this work every day. If you trade, okay, that is a different story. You will be getting money. But if you want to take some time and you want to trade after some time, but do this exercise every day without any fail. I want everybody, whoever is listening this lesson, if you are listening this lesson, I am assuming you have already completed supply demand zone price action phase 1 and phase 2 training lessons. I am assuming that. So from today onwards, every day you have to fine tune the daily and 75 minutes high liquidity zones. Every day maximum you may get some 5 or 6 zones. Minimum you may get 1 or 2 zones every day. So fine tune those zones. Whether you trade or not, that is a different story. But you have to do. If you build that skill will be useful in your entire supply demand zone price action course. Not only high liquidity zones. Even the other topics also that will be useful to you. For our core strategy also that will be useful to you. Core strategy means your bullish and bearish trade setups. So this is my request to each and every member who is attending this video. Okay, this is about NeoStock high liquidity zone. Let us look into the more scenario related to these zones in the coming videos. So next video we will discuss about price action clues, that is rejections, and aggressive trade with the HLQ zone strategy. So these concepts we will discuss in the next video. After that we will discuss bull or bear traps. After that, as I told you, some special scenarios, exceptional scenarios related to that we will do in another video. Hopefully this information in this video will be good enough for you people to start practicing and fine-tuning the high liquidity zones and identifying the institutional order flows at 5 minutes fine-tuned zones. After that, verify with the live market, and if you are in a position to trade, you can plan your trades because you are doing your own analysis. So everything as per your analysis only, the trade activities will go on. That is what I want. You people should be in a position to analyze charts on your own and take your own decisions. Why should somebody come and tell you? We are not such kind of people. We are the people expecting our trades with our knowledge. Right? That's why you completed this training program. So only thing is you have to get some experience. That's it. Nothing more than that. So let's continue from here in our next video. Thank you.